What if I told you that the real XRP price prediction is not what most people are talking about, and the numbers you are hearing online might be completely misunderstood? Because behind the noise, behind the hype, and behind the daily price movement, there is a much bigger picture for me that could completely change how you see XRP forever. So before you make your next move, you need to understand what is actually happening, where the real value could come from, and why some people believe XRP is still one of the most misunderstood assets in the entire crypto market. When people talk about XRP price predictions, most of the time they focus on random numbers without truly understanding what drives those numbers. Because the reality is that price is not just about hype or short term excitement, it is deeply connected to adoption, utility, market structure, and global financial shifts that are happening quietly in the background. And if you do not understand these factors, then any prediction you hear will sound exciting, but will not have real meaning behind it. Right now, XRP sits in a unique position compared to most cryptocurrencies because it was not designed just for speculation or quick profits. It was built to solve a real world problem, which is the movement of money across borders in a fast, cheap, and efficient way. And this is where things start to get interesting because the global payment system is worth trillions of dollars. And even a small share of that market could have a massive impact on the price per coin. When if you think about how money moves today, especially between countries, it is slow, expensive, and full of delays. And this is exactly the problem XRP aims to solve because it can settle transactions in seconds with very low fees and without the need for traditional intermediaries. And if financial institutions begin to adopt this system at a larger scale, then the demand for XRP could increase significantly over time. Now, here is where many people get confused because they assume that XRP's price should already be extremely high if the technology is strong, but markets do not work that way because adoption takes time, regulations play a major role, and large institutions move slowly when it comes to changing financial infrastructure. And this means that the real growth of XRP is not something that happens overnight, but rather something that builds step by step. Another important factor to understand is supply, because XRP has a large total supply compared to some other cryptocurrencies. And this affects how high the price can realistically go in the short term, because for the price per coin to rise significantly, there needs to be strong demand that matches or exceeds the available supply. And this is why long term predictions often depend on future use cases rather than current market conditions. At the same time, there are ongoing developments that continue to shape XRP's future, including partnerships, technology improvements, and discussions around regulation. And all of these elements play a role in how investors and institutions view XRP, because confidence in the asset is just as important as its technical capabilities. What makes XRP different is that its potential is tied closely to real financial systems, not just crypto trends. And this creates both opportunity and uncertainty, because if adoption increases, the upside could be significant. But if challenges remain, growth could take longer than expected, and this balance is what makes XRP predictions both exciting and complex at the same time. When you hear people talk about XRP reaching very high numbers, you have to ask yourself what assumptions are being made, because a price prediction is only as strong as the reasoning behind it. And without understanding the bigger picture, it is easy to, get caught up in unrealistic expectations or unnecessary fears. So at this stage, the most important thing is not the exact number but the direction, because XRP is positioned in a way that could benefit from major changes in the financial world. And if those changes continue to develop, then the value per coin could reflect that growth over time, but it requires patience, awareness, and a clear understanding of what is actually driving the market. This is just the beginning of understanding XRP's true potential, because once you start looking deeper into adoption, institutional interest and market cycles, you begin to see that price predictions are not just guesses. They're reflections of where the world might be heading next. When we go deeper into XRP price prediction, one of the most important things to understand is how different types of predictions are created, because not every prediction is based on the same logic. And this is where many people get misled, since some numbers come from pure hype while others are built on actual data, adoption trends, and financial modeling. And if you cannot tell the difference between these, then it becomes very easy to believe unrealistic targets that have no strong foundation. There are generally three ways people predict the price of XRP. And the first one is short term market analysis, which focuses on charts, patterns, and trading behavior. And this type of prediction is usually used by traders who look at resistance levels, support zones, and market momentum. But the problem here is that these predictions are only useful for days or weeks, not for long term value, because they depend heavily on market sentiment and can change very quickly without warning. The second type of prediction is based on market cycles. And this is where people look at how the crypto market has behaved in the past, especially during bull runs and bear markets. And they try to estimate how high XRP could go if the market enters another strong upward phase. And while this approach is more reliable than short term trading predictions, it still has limitations, because history does not always repeat in the exact same way, especially in a market that is evolving as fast as crypto. Now, the third and most important type of prediction is based on utility and adoption. And this is where XRP stands out from many other cryptocurrencies, because its value is closely linked to how much it is actually used in real world financial systems. And if banks, payment providers, and institutions begin using XRP for cross border transactions at scale, then the demand for XRP could increase in a much more stable and long term way. To understand this better, you need to think about how value is created in any system, because if something is widely used and solves a real problem efficiently, then it naturally gains value over time. And XRP is designed to be a bridge asset that connects different currencies and allows money to move instantly across borders. And if this use case becomes more common, then the price per coin could reflect that increased demand. However, adoption does not happen instantly. And this is where patience becomes a key factor, because financial institutions are not quick to change their systems. They require testing, regulatory clarity, and long-term confidence before making large-scale decisions. And this means that even if XRP has strong potential, the price may not reflect that immediately, which can be frustrating for investors who expect fast results. Another major factor that affects XRP predictions is regulation, because unlike many other cryptocurrencies, XRP has been involved in legal discussions that have influenced how it is perceived in the market. And while progress has been made over time, the final clarity around regulations can play a huge role in determining how comfortable institutions feel about using XRP. And this directly impacts demand and price potential. At the same time, there is also the factor of competition, because XRP is not the only solution in the payment space. And there are other technologies and systems that aim to solve similar problems. And this means that XRP's success is not guaranteed, but depends on how well it performs compared to alternatives, and how effectively it can position itself as a reliable and efficient option for global transactions. Despite these challenges, many analysts still see, strong potential in XRP because of its unique position in the market, and because it has already established relationships and infrastructure that can support future growth. And this is why some long-term predictions remain optimistic, even if short-term price movements seem slow or uncertain. It is also important to understand that price per coin is influenced by market psychology, because investors often react to news, rumors, and expectations, and this can create sudden spikes or drops that do not always reflect the true value of the asset. And this is why long term predictions require a broader perspective rather than focusing on daily price changes. As you continue to analyze XRP predictions, you start to realize that there is no single number that can define its future value, because the price depends on multiple factors working together, including adoption, regulation, competition, and overall market conditions. And each of these elements can change over time, which means predictions must always be viewed with a level of flexibility and caution. What truly matters is understanding the direction in which XRP is moving, and whether the fundamental factors that support its growth are strengthening or weakening, because this gives you a clearer picture than any single price target ever could, and helps you make more informed decisions instead of relying on hype or fear. When analyzing XRP price prediction further, it becomes very important to understand the role of real world financial integration, because the true value of XRP is not only based on trading activity or speculation, but on how deeply it becomes, connected with global payment systems. And this is where the conversation shifts from short-term price movement to long-term financial transformation, which many people often overlook when they only focus on charts and daily market updates. In the traditional financial system, cross-border payments are handled through multiple intermediaries, and each step adds time, cost, and complexity, which is why international transfers can take days to settle. But XRP was designed to reduce this friction by acting as a bridge asset that can move value quickly between different currencies. And if this system is adopted widely, it could significantly increase the demand for XRP as a liquidity tool rather than just a speculative asset. The important thing to understand here is that XRP does not need every bank in the world to adopt it for there to be a major impact on price, because even partial adoption at scale, especially by large financial institutions or payment providers, could create meaningful liquidity demand. And when liquidity demand increases in a system with limited circulating supply at exchanges, it can influence price movement over time in a gradual but powerful way. At the same time, financial integration is not a simple process because banks and institutions operate under strict regulations and require proven stability before integrating any new technology into their core systems. And this means that even if XRP offers a faster and cheaper solution, it still has to go through long evaluation cycles, compliance checks, and real world testing before it can be fully adopted, which slows down the pace of price reflection in the market. Another key factor in this stage of analysis is the concept of liquidity networks, because XRP is often discussed in terms of its ability to provide instant liquidity for cross border settlements. And liquidity is one of the most important elements in global finance, since without it, money movement becomes slow and expensive. And if XRP becomes a standard liquidity tool in even a portion of global payment corridors, its utility value could increase significantly over time. This is where long-term predictions become more complex, because instead of simply asking how high XRP can go in price, the more important question becomes how much transactional volume it could support in the future financial system, and how much demand that level of usage would create, because price is ultimately a reflection of demand versus supply, and utility driven demand behaves differently from speculative demand. It is also necessary to consider the role of partnerships and financial networks, because XRP's ecosystem is connected with various institutions and technologies that aim to improve global payment efficiency. And while not every partnership directly translates into immediate price increases, they contribute to building the infrastructure that could support future adoption. And infrastructure is often the foundation of long term value growth in financial systems. However, even with strong infrastructure development, the market still reacts slowly to fundamental progress, because investors tend to price in expectations gradually. And sometimes the real world usage of an asset grows before the price fully reflects it, which creates periods where the asset may seem undervalued compared to its potential. And this is something that has been observed in many early stage financial technologies throughout history. Another layer to this discussion is institutional behavior, because large financial players do not enter markets based on emotion or hype, but based on long-term efficiency, cost savings, and regulatory safety. And if XRP continues to improve in these areas, then institutional interest could increase gradually over time, which would not only affect demand, but also reduce volatility as the asset becomes more integrated into structured financial systems. At this stage of understanding, it becomes clear that XRP price prediction cannot be separated from the global financial system itself, because XRP is not just a digital asset moving in isolation, but a tool designed to operate within a much larger ecosystem of money movement. And this connection is what makes its long term outlook both complicated and significant at the same time. So instead of focusing only on specific price targets, it becomes more meaningful to analyze how quickly and effectively XRP can expand its real world usage, because that is the factor that will ultimately determine whether long term predictions become realistic or remain purely speculative ideas. As we continue deeper into XRP price prediction, one of the most critical elements that cannot be ignored is the role of market cycles and global liquidity conditions. Because even if an asset has strong utility and real world use cases, its price movement is still heavily influenced by the overall behavior of the financial market. And this is especially true in the cryptocurrency space, where liquidity flows can shift rapidly depending on investor confidence, economic conditions, and institutional participation. In every major crypto cycle so far, we have seen a repeating pattern where capital enters the market in phases, starting with Bitcoin leading the movement, followed by major altcoins, and eventually smaller assets gaining attention. And XRP has historically been part of these broader cycles, which means its price does not move in isolation, but rather reacts to the overall direction of the crypto economy as a whole. And understanding this helped explain why predictions often vary so widely. During strong bull market conditions, liquidity tends to expand across the entire crypto sector. And when this happens, assets like XRP can experience rapid price increases because investor appetite for risk becomes higher, and capital flows more freely into alternative assets beyond Bitcoin. And in these periods, even moderate increases in adoption or positive news can have amplified effects on price due to market momentum. However, during bearish or uncertain market conditions, the opposite effect takes place, where liquidity tightens, investors become more cautious, and even strong projects can experience stagnation or price decline, not because their fundamentals have changed, but because overall market sentiment is weak. And this is why timing plays such an important role in how XRP price predictions actually unfold in reality. Another important factor in market cycles is the concept of liquidity rotation, where capital moves from one asset class to another in search of higher returns. And in crypto markets, this rotation often starts with large cap assets and gradually flows into mid cap and high potential assets. And XRP often benefits from these later stages of market rotation when investors start looking beyond the most dominant cryptocurrencies. At the same time, macroeconomic conditions outside of crypto also play a major role, because global interest rates, inflation levels, and financial stability all influence how much capital is available for risk assets like cryptocurrencies. And when economic conditions are favorable, investors are more willing to allocate funds into digital assets, which indirectly supports price growth across the entire market, including XRP. It is also important to understand investor psychology during these cycles, because market participants often behave in emotionally driven patterns, where fear dominates during downturns and greed dominates during uptrends. And these emotional cycles create sharp price movements that can temporarily disconnect price from fundamental value, which is why predictions based purely on emotion often fail to provide accurate long term outcomes. In addition to this, algorithmic trading and institutional strategies have become more influential in modern markets. And these systems react quickly to liquidity changes, news events, and market signals, which increases volatility, but also improves efficiency in price discovery over time, meaning that XRP's price movements today are shaped by a more complex and interconnected system than in earlier crypto cycles. Despite these fluctuations, long term predictions for XRP often focus on how it performs across multiple cycles rather than just one, because sustainable value growth is usually built over extended periods where adoption increases gradually, and market cycles help reprice the asset higher over time as confidence and usage expand. What this means is that even if XRP experiences periods of slow or sideways movement, it does not necessarily reflect a lack of progress, but rather the natural rhythm of financial markets adjusting to both internal developments and external conditions. And this is why understanding cycles is essential before forming any serious price prediction. Ultimately, the combination of liquidity cycles, macroeconomic trends, and investor behavior creates the environment in which XRP operates. And this environment can either accelerate or delay how quickly its price reflects its underlying utility, making it clear that predictions must always be viewed through the lens of broader market dynamics rather than isolated expectations. When we bring everything together in XRP price prediction, the final picture becomes much clearer, because instead of focusing on a single number or a short term target, it becomes more important to understand the balance between utility, growth, market cycles, institutional adoption, and global financial conditions, all of which interact with each other to shape the long term value of XRP in a way that cannot be simplified into one fixed outcome. At this stage, it is clear that XRP's potential is closely tied to real world financial usage, especially in cross border payments and liquidity solutions. And if adoption continues to expand even gradually over time, then the demand structure for XRP could strengthen in a way that supports long term value appreciation. But this process is not linear, and it will likely move in phases depending on regulation, technology integration, and institutional readiness. One of the most important realities to understand is that price per coin is not just a reflection of technology, but also a reflection of trust and participation. Because even the most efficient system cannot reach its full value potential unless it's widely trusted and actively used. And in the case of XRP, trust is being built slowly through regulatory progress, partnerships, and increasing awareness in the financial sector, which means the foundation is still developing. At the same time, market speculation will always play a role in XRP's price movement, because traders and investors continuously react to news, predictions, and global market sentiment. And this creates short term volatility that often distracts from long term trends, but over time, it is usually the underlying utility and adoption that determine the sustainable direction of price rather than temporary market emotions. It is also important to recognize that XRP exists within a highly competitive financial innovation space where multiple technologies are trying to solve similar problems. And this competition pushes continuous improvement. But it also means that XRP must maintain its relevance by proving its efficiency, scalability, and regulatory compatibility in real world financial systems, because long term success depends on consistent performance rather than early advantage alone.